Welcome back to FundOpsHQ Live. I'm Danny Bloomstein. Today is April 23rd, 2026, and here's what we're going through on the show today. EQT just closed the largest Asia private equity fund ever raised, $15.6 billion at the close of BPEA 9. Sequoia raised $9 billion for late-stage AI under its new leadership. Brookfield is targeting $30 billion for its sixth flagship fund, infrastructure fund, with the $20 billion first close expected in Q3. CVC and GTCR team up for a take-private bid for medical device maker Teleflex. Apollo bought 13% of McNeeson's medical surgical solutions business for $1.25 billion. Schroders shareholders formally approved the £9.9 billion sale to Nuveen. That creates a $2.5 trillion asset manager. And Bill Ackman's Pershing Square IPO is now actively marketing to retail investors. This show is presented by FundOpsHQ. For daily coverage of the funds industry, visit fundopshq.com and subscribe to our newsletter. It's free. Well, let's get started with the market pulse. The SEC and CFTC jointly proposed rolling back the Form PF reporting regime, and Schroders shareholders signed off on the £9.9 billion Nuveen takeover. The SEC and the CFTC on April 20th jointly proposed amendments that would materially reduce reporting burdens on private fund advisors. The headline change, the Form PF filing threshold, rises from $150 million for private fund AUM to $1 billion. The agencies estimate that change alone eliminates filing requirements for nearly half of currently registered advisors. The proposal also raises the large hedge fund advisor threshold from $1.5 billion to hedge fund AUM to $10 billion. About two-thirds of current large hedge fund advisors would drop out of that designation, but the agencies note that 81% of the gross hedge fund assets would still sit with managers above the new line. The proposal largely unwinds the February 2024 Form PF amendments before advisors were required to comply with them, including the event reporting requirements for private equity managers that the industry had been lobbying against. Schroders shareholders approved the £9.9 billion cash sale to Nuveen on April 16th with 99.9% of votes cast in favor, far above the 75% threshold. Nuveen is the asset management arm of TIAA. The combined firm will manage approximately $2.5 trillion in assets when the deal closes, currently expected in Q4 2026, subject to antitrust clearance. The Schroders brand stays standalone for at least 12 months post-close, and the Schroders London office becomes the enlarged group's non-U.S. headquarters. The Schroders family receives roughly $5.5 billion in cash for its 41% holding, ending more than 200 years of family control. Last week, we covered Arcmont's $2.5 billion credit continuation vehicle. Arcmont is Nuveen's European private credit affiliate, so post-close Schroders sits under the same parent as Arcmont. Partners Group closed its eighth flagship private equity secondaries program at over $9 billion in total client commitments, including the closed-end fund plus bespoke mandates and co-investment vehicles. Roughly one-third of new commitments came from outside Europe, with the largest individual checks coming from Asia-Pacific investors. The program is largely 60% committed. Partners Group's PE business now manages $68 billion across directs, secondaries, and the firm has invested $40 billion across secondaries since launching the strategy in 1998. Nevada PERS, the $75 billion U.S. public pension, transferred control of its Clear Lake Capital Partners investments to its outside advisor. The reason? Clear Lake's pending acquisition of Pathway Capital Management creates a conflict of interest because Pathway also serves as an advisor to other public pensions. Nevada PERS has granted its advisor discretion to liquidate the Clear Lake exposure via the secondaries market if it chooses. Nevada has not disclosed the dollar size of the Clear Lake position. It's the first time a major U.S. public pension has publicly cited the Clear Lake Pathway tie-up as a conflict requiring action. The sovereign wealth funds of China, Indonesia, and Azerbaijan jointly launched a $1 billion private equity platform this week. The vehicle is a cooperative platform among three sovereign investors with no anchor LP from outside the three founding sovereigns disclosed in the launch. The China Investment Corporation, the Indonesia Investment Authority, and Azerbaijan's State Oil Fund are the founding partners. On to private equity. Now to private equity, EQT just printed the largest Asia private equity fund ever raised, $15.6 billion. EQT closed BPEA 9, the ninth fund in the Baring Private Equity Asia series, at $15.6 billion in total commitments, hitting the hard cap with $14.9 billion in fee-generating AUM. That is the largest Asia-Pacific dedicated private equity fund ever raised. The predecessor BPEA 8 closed at $11.2 billion in 2022, so Fund 9 is roughly 39% larger. The fund targets large cap, pan-regional buyouts across India, South Asia, Southeast Asia, Greater China, Japan, and Australia, with a continued lean into healthcare, technology, and business services. Stockholm-listed EQT manages roughly 280 billion euros across its global platform. The Asia franchise, it's now its largest single regional strategy. Bridgepoint reached approximately 6 billion euros at the first close of its newest flagship Europe buyout fund per Bloomberg, putting it at roughly 80% of target. The fund targets European mid-market buyouts in business services, financial services, healthcare, and consumer. The first close came less than 6 months after launch, a notably fast pace for a European buyout fund of this size in the current fundraising market. CVC Capital Partners and GTCR submitted a joint take-private offer for Teleflex, the New York Stock Exchange-listed medical device maker, according to Bloomberg. Teleflex makes breathing tubes, catheters, and vascular access products used in hospital intensive care units. The company carries a market value of about $5.5 billion at its most recent closing price of $124.75 a share, with shares up 13% in after-hours trading on the bid news. Teleflex sold 3 units for $2.03 billion in December as part of an earlier streamlining. Amsterdam-listed CVC manages roughly $241 billion. Chicago-based GTCR is the smaller of the two and runs a long-running healthcare and med tech book. The board is reviewing the offer. Apollo agreed to acquire a roughly 13% minority stake in McKesson's medical surgical solutions business, a $1.25 billion in convertible preferred equity at a $13 billion enterprise valuation. McKesson keeps majority ownership and operating control, and the deal is structured as a separation step ahead of a planned IPO of the medical surgical solutions business. The unit supplies medical products, equipment, and supply chain services to doctors' offices, surgery centers, and care providers outside of hospitals, a different business from McKesson's much larger drug distribution arm. Davis Polk advised McKesson. EQT raised its takeover bid for Intertek, the FTSE 100 testing and certification firm, to roughly £9.7 billion, or about $12.3 billion, including debt, per the Financial Times. Intertek's board rejected EQT's earlier £7.92 billion proposal on April 16th as a material undervaluation. The revised bid is now under board review. Under UK takeover rules, EQT has until May 14th to either table a firm offer or walk away. Moving on to private credit. Permira priced another European CLO this week, and Marathon hired a senior Apollo originator. Permira Credit priced its Provida CLO 15 at 403.3 million euros, the firm's 19th CLO transaction globally and its 5th issuance of 2026. The reset was structured against what Permira called a volatile environment for the European CLO market, where new issue spreads have widened over the past month on broader macro repricing. Premier Credit is one of the largest European CLO managers by issuance volume and has been one of the most active issuers through the spring window. CVC Credit Partners priced a reset of its CVC Cordatas Loan Fund 19, a 439.5 million euro European CLO with a 4.5-year reinvestment period closing on May 29th. Resets and refinancings have made up the bulk of European CLO issuances this spring as managers extend the working life of existing vehicles rather than launch new ones into a wider spread market. Marathon Asset Management hired Murad Khaled from Apollo as managing director and lead originator for asset-backed and direct lending in Europe, reporting to Marathon's head of European credit. Khaled joins from Apollo, where he had spent the past several years in European private credit origination. Marathon manages roughly $23 billion across global credit strategies and has been visibly building out its European platform over the last 18 months. Now over to venture capital. Sequoia raised $7 billion under its new leadership. Sequoia raised approximately $7 billion for its expansion strategy, the firm's late-stage growth vehicle focused on the US and Europe. That is roughly double the comparable $3.4 billion expansion fund that Sequoia raised in 2022. Per Bloomberg, the raise is the first major fundraise under new co-stewards Alfred Lin and Pat Grady, who succeeded Roelof Botha as joint managing partners in November 2025. Sequoia holds late-stage positions in OpenAI, Anthropic, and xAI, all three of which are reportedly preparing to file for public listings in 2026. A16Z partner Brian Kim is leaving the firm to launch his own AI-focused venture firm. Kim was a partner at Andreessen Horowitz's consumer practice and led investments in social and creator platforms, and his departure is the latest in a steady stream of senior partners leaving major brand name VCs to start dedicated AI vehicles. The new fund's target size and LP base have not been publicly disclosed. Three major Korean firms join up. Search and tech giant Naver, gaming company Krafton, and asset manager Mirai Asset Management jointly launched a roughly $475 million Indian unicorn fund, sized to 6,000 crore Indian rupees. The vehicle is purpose-built to invest in Indian unicorn stage technology companies with a focus on AI and consumer internet. It is one of the largest dedicated India-focused funds ever launched out of Korea and reflects the deepening tech corridor between Seoul and Bangalore. Apposite Capital launched a UK-focused health tech growth fund anchored by a £100 million commitment from the British Business Bank. The fund will invest in growth-stage UK healthcare technology companies, diagnostics, digital health, medtech, and is part of the British Business Bank's broader push to deploy government-backed anchor capital to specialist domestic VCs. Now, shifting over to real estate and infrastructure, Blue Owl is taking Sila Realty Trust private for $2.4 billion, and Brookfield is targeting $30 billion for its sixth flagship infrastructure fund. Blue Owl Capital agreed to acquire Sila Realty Trust, a Tampa-based net lease healthcare REIT, for approximately $2.4 billion in an all-cash transaction. The deal is at $30.38 a share, a 19% premium on Sila's April 17th close, and a 25% premium on its 30-day volume-weighted average. Sila owned 137 properties and 3 undeveloped land parcels across 65 markets at its most recent reporting. The acquisition is being executed by affiliates of Blue Owl Real Estate Capital. Newmark advised Blue Owl. New York-based Blue Owl manages more than $307 billion across credit, GP stakes, and real assets, and called out healthcare net lease as a stable, predictable cash flow sector. Closing is expected Q2 or Q3, subject to shareholder approval. Choice Properties REIT and KingSett Capital agreed to jointly acquire Toronto-listed First Capital REIT in a cash and stock deal worth approximately 9.4 billion Canadian dollars, or about 6.8 billion US dollars, including debt. First Capital unit holders will receive $19.24 Canadian cents in cash plus 31 cents 0.31 Choice Properties units per First Capital unit. Total consideration of $24.40 Canadian cents. Choice will take roughly 5 billion Canadian dollars of First Capital's higher quality grocery anchored urban retail assets. KingSett will take the remaining 4.4 billion Canadian dollars. Choice Properties is the REIT controlled by the Weston family. The transaction is expected to close in the second half of 2026 and would delist First Capital from the TSX. Brookfield is targeting approximately $30 billion for its sixth flagship infrastructure fund, with a roughly $20 billion first close expected in the first quarter per infrastructure investor. The predecessor Fund 5 closed at $30 billion in 2023, the world's largest closed-ended private infrastructure fund at the time. Brookfield has signaled it is not looking to upsize Fund 6 beyond Fund 5. The fund will continue Brookfield's data center, energy transition, and transport infrastructure focus, with US and Asia Pacific deployment expected to dominate the early vintage. InvestCorp acquired a 3-property residential portfolio totaling 463 units across the Los Angeles and New York metros for $200 million. The portfolio comprises 2 senior living facilities and 1 multifamily complex. EQT launched a dedicated AI infrastructure investing strategy targeting the physical infrastructure that supports AI compute expansion globally: data centers, power generation, fiber, and cooling. The strategy will sit alongside EQT's existing infrastructure flagship and will draw on the firm's data center deal experience, including its Edge Connects platform. Fund level capital target was not disclosed at launch. On to hedge funds. Bill Ackman is pricing the Pershing Square IPO this month, and AllianceBernstein shut down a multi-strat. Bill Ackman is actively marketing the Pershing Square USA IPO, targeting at least $5 billion and as much as $10 billion in proceeds. Ackman has already lined up $2.8 billion in private placement commitments. Pershing Square USA, ticker PSUS, will trade on the New York Stock Exchange at $50 a share. The first-time retail investors will have direct access to Ackman's concentrated portfolio strategy. As an inducement against the typical closed-end fund discount to NAV, every 5 PSUS shares purchased come with 1 bonus share of Pershing Square Inc., the management company, which Ackman is taking public in tandem under ticker PS. Pershing Square Capital Management currently runs $15.5 billion in net assets and has delivered a 380% net of fees return over the trailing 10 years per the firm's March 31 disclosure. Top holdings including Uber, Amazon, Alphabet, and Meta. Centerbrook Partners, the Greenwich, Connecticut hedge fund founded in 2020 by ex-Lone Pine partner Steve Stemmerman, was profiled this week as it crossed $1.3 billion in AUM. The firm runs a market-neutral, long-short equity portfolio built by aggregating position and research data from a network of independent contributor funds. The model is positioned as an alternative to the multi-manager pod platform. Instead of hiring portfolio managers as employees, Centerbrook collaborates with independent managers and pays them for their data and research. Stemmerman was previously a portfolio manager at Lone Pine Capital and founded Canadas Capital before launching Centerbrook. AllianceBernstein closed AB Aria, a multi-strat hedge fund, citing lack of scale. AB Aria was launched in 2020 inside AllianceBernstein's alternatives platform. AllianceBernstein manages roughly $800 billion across all strategies. Investor capital will be returned in the coming months. On to people and firms. KKR elevated Joel Trout to global head of CRE lending. GTCR named Doris Meister executive chair of Fiduciary Trust, and King Street restructuring its leadership. KKR elevated Joel Trout to global head of commercial real estate lending. Trout led the build out of KKR's CRE lending business to roughly $45 billion in AUM. The promotion formalizes Trout's role across both originated CRE debt and the firm's CRE securities and CMBS strategies, with global oversight of CRE credit now consolidated under a single leader. GTCR completed its acquisition of Fiduciary Trust Company, and Doris Meister, the former chair and CEO of Wilmington Trust, joined as executive chair of Fiduciary Trust. Meister ran Wilmington Trust through M&T Bank's acquisition of the firm and led it during the post-deal integration. Fiduciary Trust manages roughly $21 billion in private wealth assets and serves high net worth families and institutions. King Street Capital Management restructured its senior leadership. Partners Domenico Lia and Jeff Rosenbaum are now co-heads of the firm's flagship hedge fund and special situations strategy. King Street has spent the past 2 years narrowing its product line to focus on core credit. The new co-head structure pairs the credit-focused leadership across the flagship and special situations book under one team. Citadel Chief People Officer Jorg Gering is leaving the firm after less than 2 years in the role. Gering joined Citadel from Apple in 2024, where he had been VP of People Operations. Citadel manages roughly $67 billion across its multi-strategy platform. A successor has not been named publicly yet. Now to the LP corner. Washington State printed $1.8 billion across alts. The UAE's Altera anchored at more KKR Climate Capital, and Japan's GPIF made its first commitment to an Asia-based real estate manager. The Washington State Investment Board committed approximately $1.8 billion across 3 alternative investment funds at its April board meeting and hired a new global equity manager. The 3 alts commitments span private equity, credit, and real estate. The largest single commitment went to a re-up with one of the board's existing buyout managers. WSIB manages roughly $200 billion in total plan assets across the state's pension and trust funds. Altera, the $30 billion Abu Dhabi-backed climate vehicle, committed additional capital to KKR's global climate transition strategy. This is the second commitment Altera has made to a KKR climate vehicle since launching in 2023. Altera has set up a COP28 to deploy $30 billion into climate-focused private market strategies globally and has been a recurring anchor LP for the largest brand name climate platforms, KKR, Brookfield, BlackRock, and TPG Rise Climate among them. Japan's Government Pension Investment Fund, GPIF, the world's largest public pension at roughly $1.9 trillion in AUM, committed 10 billion yen or $67 million to a Hong Kong-based Phoenix Properties Japan-focused opportunistic real estate fund. It is GPIF's first commitment to an Asia-based real estate manager. GPIF's real estate book has historically been allocated almost entirely through US and European managers. Colonial First State, the Australian superannuation manager, committed 370 million Australian dollars, about 240 US dollars, to Morrison Value Add Infrastructure Strategy 2. The commitment is part of the fund's shift to what Colonial First State has called a co-investment led portfolio model, where the fund pairs capital commitments with direct co-investment rights into specific infrastructure assets alongside the GP. Morrison is a New Zealand based mid market infrastructure manager with a long running relationship with Australian super funds. That is the week. FundOps HQ is supported or presented by FundOpsHQ.com. One more time, you can visit FundOpsHQ.com to subscribe to the newsletter. It's free. Thank you very much for listening. We'll be back next week with more. Take care.